Hey traders, Raghee here, and in this update we're going to take a look, and this was a request from my Sector Secrets Mastery, so shout out to those folks there. The question was about the 1, 2, 3 pattern. If you're not familiar with the 1, 2, 3, let me show you where you can do a little bit of reading up on this, and then that way you'll have a really good understanding of what it is that I'm looking at and why. And in order to find this particular write-up on the 1, 2, 3, which is a Dow 1, 2, 3 pattern, if you head on over to Google and search Countdown Trader 1, 2, 3, you'll see the first two, actually the first three, first four? Oh, look at that. First few hits are all the different breakdowns, explainers that I've done on the Dow pattern. There's two kinds though. One is the reversal, and that's not the kind we're talking about here today. We're going to talk about the continuation pattern. The 1, 2, 3 continuation. What is a 1, 2, 3 pattern? 1, 2, 3 pattern is a classic pattern from Charles Dow, and it is designed to let us know of usually a continuation of a trend or a trend shift or reversal. Right now, the daily time frame is right back into chop. It spent a brief amount of time in a downtrend, then it went to neutral, then it spent a brief amount of time in an uptrend, and then now it's gone back to neutral. So we're just all over the place, back and forth. Maybe the weekly, granted it's a longer time horizon, and it's a longer time frame. Now let's talk about the difference between the two. Time frame is, well, what's the setting? What's the interval of the chart? You'll see this is a 10-year weekly time frame. So it goes back 10 years, and every single candle represents 1 week of data. Open, high, low, close. As opposed to a daily time frame, which is the open, high, low, close of a single session. This is a week's worth of sessions. The weekly also has a longer time horizon. If I'm setting up a weekly trade, a weekly time frame based trade, my expectations for movement could really go from weeks to months. On a daily, my expectation for follow through for movement could go from days to weeks. So remember, I don't ever want anyone justifying a daily time frame trade because a weekly, or even worse, a monthly is doing something, because a week's worth or a month's worth of sessions can take us far away from the validity and really reasonable amounts of risk that we would consider on a daily, right? So be careful justifying a daily time frame position with something that the weekly is doing. We're talking strictly about the weekly and what would meet the criteria of the 1, 2, 3 having formed and triggered. So 1, 2, 3 needs your swing low. Here's your 1. You need a swing high. Here's your 2. And you need a retracement of that 1 to 2. Usually I prefer about a 50% pullback, and that's exactly what we have here. Potentially, if this holds, and that could be a 3. I mean, the next week's candle would have to not put in a lower low than the one we have so far this week. So whatever the low is today, that low has to be intact for this to be a 3 point. That's the retracement. The whole pattern is reliant on the number 1 low, this number 1 low point, not being broken. So this low here, this would be the low from June 13, the week of June 13, at 36.39. We cannot make a lower low than that, otherwise the pattern count starts all over again. I would also prefer that the time it takes to form the pattern and to break the pattern not take longer than approximately 21 candles. So yes, I'm also counting candles. I don't want it to take more than 21. That's the rule that I use on the daily so that a pattern doesn't take more than about a month to form. it's probably not as important on the weekly, but if a pattern takes longer and longer and longer to form, rather than seeing the crispness of a continuation 1, 2, 3, we're probably really just looking at chop. That would mean for the 1, 2, 3 to confirm, we need to break higher through. This would be the August 15 high at 43.27.5. So I'd like to see, say, maybe 43.30 print, something like that. Let's see it break that level. The other thing that would be very, very, very helpful is if we have a positive MACD. That would be extremely helpful as well, because I prefer, if and when we have a momentum break, that the MACD is above 0. So if we're going to have a momentum break to the upside, I would prefer the MACD be above 0. And or a 20-period CCI break through positive 100. So these are settings that you can put on free indicators on your platform. I would like to see that as part of the completion of this pattern. By the way, gang, that means that anything we do in between this zone, right, it's just back and forth noise on the weekly, all right? So I'll keep an eye on those indicators. So here's a sneak peek at the trade flags that I use for a 20-period CCI, a 12, 26, 9 MACD, and then a 21K 3D slow stochastic. So rather than have those three indicators taking up all this valuable real estate at the bottom of my screen, I can just have them conveniently and very compactly sitting there as some trade flags, labels. MACD is already green, great. As we break higher through the resistance here, if you want to use another confirmation, would love to see this CCI above the positive 100. And that would be a weekly 1, 2, 3 breakout, gang. That's something that would be very interesting to see. And then anything else in this range, including revisiting the 200 here. By the way, if we're still neutral, I'll be buying that for my longer term portfolio. So lots to consider. Love the question. Hope this helps. The pattern works intraday on a 5-minute time frame. The pattern works on a daily. And here I'm showing you implications for this pattern following through on the weekly S&P futures. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.